The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay. Looking good, Billy Ray. Feeling good, Lewis. Good morning, everyone. Well, we've had a couple of requests that we'll take care of here in just a moment. But first, we're going to take a look at our DAX index on the 4-hour chart. As you can see, the pattern there, we had an expansion up at that 1.27 level. And now we're in the midst of some type of a correction. If we go down to a smaller time frame, which is usually best to go down to the hourly, you'll see that we've come down to almost a 61% retracement of the low here, back just a few days ago. So we'll watch these very closely each day as we always do. But right now, it's certainly in some type of a trading range. Okay, we have two questions. The first one is regarding the soybean oil. I'll start out by taking a look at the soybean complex because we looked at that yesterday very, very closely while we were on the air. We were hitting this 78% retracement level in the beans at the 10.27 3/4 level. The low was 10.26 3/4, $50 lower. It's now trading above the 10.40 level. It's moved 13 cents. In your favor. If you happen to do that trade, my suggestion would be to put your stop at break even and just to see what happens, because you've had a double outside day. You had an outside day Monday and an outside day Monday on the downside and an outside day Tuesday on the upside. That's like a big reversal day. So your risk here would be virtually nothing. The whole key to this is to make sure that you don't lose anything or lose as little as possible. Now, I had another question about this soybean chart that people have asked me about, and they see these cycle formations that I have put in here. These are in Ensign. I use these because I did original work on cycles, was back with Jim Hurst, and before that I was working with Edward Dewey at the Foundation for the Study of Cycles many years ago. That was back in 68, 69. And 70, but I only got to speak with Dewey one time, and he felt that there was something astrological. At the time, I had no idea what he was talking about, and whether that means anything or not. I did have a lot of conversations with his assistant and secretary, Gertrude Shirk, and she also felt that there was something very strong in cycles related to the astrology. But I've been fooling around with, I've been studying it for many years, but frankly I may be a slightly bit closer, but there's so many unanswered questions that it's really difficult. What you got to try to do is to get the probabilities in your favor. Now, going back to this July bean chart, you'll notice here that you have the larger cycle, which is a 35 or 36-day nominal cycle. That's present in a lot of different things. And then if you break that down into the half cycle, you see 18 and 36. And that's what you're looking for, is when you have these 18 and 36-day cycles coming together. Well, they're coming together, guess what? Right on a solar eclipse and new moon. So that's probably the reasoning behind it, but we don't know for sure. I'm just saying you've got to get the pattern to see what your risk is going to be and your profit potential. Timing is the most elusive thing in the market, folks. No one has ever really hit it anywhere near 80%. I'm sure there are a few people, but they are probably in the stratosphere somewhere, or who knows where they could be, but they certainly don't tell us. We have some pretty good people that give us some really great ideas, but nobody's 100%. I mean, there really isn't. Market timing is a little more difficult than some people think it is, and Warren Buffett, of course, thinks that it's totally impossible to time the market. So that's the main thing. Now, I did want to mention just a little bit here about the soybean oil, because we had the same situation occurring here yesterday in soybean oil. Now, this chart that we're going to be looking at was not updated as of yesterday because we went down in the May oil to almost that perfect level down there at the 78% level, and we've rallied, quite a bit, just like the soybeans did. So both of those were completed patterns. The problem is you had to pick one or the two. We decided to pick the soybeans, mainly because I had a great deal of success in July soybeans from old history days, and that was the reasoning behind it. But I don't know if it's still going to work, but the main thing is that if you did buy it, keep your stop at the break-even point, and if you wanted to be careful, you could use a 8-cent trailing stop if you like. But frankly, I think just putting a stop at break-even and seeing what's happened. When the market comes out of here like this, where you had an outside day to the downside on Monday, looking very, very terrible, and you're right over a solar eclipse and new moon, and then the market reverses the last 2 days of highs, not just the days of Monday, but also Tuesdays. That tells you that there's something pretty substantial going on in the market. Would be my suggestion, but that's just my suggestion. We'll see how it goes. Okay, let's take a quick look about one other thing that we've had here to talk about. This is in the sugar market. I wanted to show you. This is in the May sugar. I won't take very much time here because I don't trade sugar, but I did bring it up because we had a question. Yesterday, we hit the exact 61% retracement in the sugar, just like we did in the beans and in the oil and all the other things, wheat, corn. All of them hit major spots right over those eclipses. So here again, you don't want to risk very much if, in fact, if you want to be in the sugar. So we'll see what's going to happen. You're right, Gator. The soybean oil also had a beautiful 135 pattern on the daily. That's a good eye. I appreciate the plug on that, but that is definitely what happened on that. So what's amazing to me, folks, is I go through these charts day after day, and believe it or not, I've been doing this forever. I don't think it's boring at all. I really enjoy it. But what amazes me is how the repetition is there. I mean, I'm sure that when Andrew Lowe was writing his book, the Non-Random Walk Down Wall Street back in the early 2000s, that when he started seeing all these formulas that they statistically validate all of this stuff, that I'm sure they were amazed, and that's probably why they wrote the book about it. But boy, those formulas that they use to discover the relationships are far beyond this old cowboy's pay grade. I can certainly promise you that. Now, I wanted to share with you one other thing here, and then, I have to do something first for one of our good folks here in the den that asked me a question. I'm going to bring up the chart of the, hold on one second here, folks, and you'll see it. This is the XAU, the gold miner index versus the dollar. We talked about this yesterday a little bit, but you can see what happened on Monday. We had this really big breakdown in the market. It dropped about 3%, and with a big wide-ranging bar to the downside. But if you'll notice over these last 10 days, this has been telegraphing something's been wrong, because gold's been going up and the gold miner index has been going down. So that could be very, very important. 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're going to take a look at something we've had on our watch list for a while, and it's starting to come together here this morning. If you'll notice here, the chart on the April crude oil chart, we have a Gartley forming. If you'll notice very, very closely, you'll see the cycle high to high. That's basically how you quantify a head and shoulders pattern. You want to make sure that it's best for the right shoulder to be lower than the left shoulder, which in fact it is, and you'd like to see time symmetry between the two shoulders and the head. That's how you really quantify it. So what you're watching now, what you want to see right now is where we are up to date. This was about $500 ago, but what we're looking at now is the market coming down almost ready to make the 78% level. That's going to come in around the 53.20 level. Anything below 53 would suggest that this thing might start to really get some legs and break down below that coveted $52 barrel, 52.50 level that is held since the 16th of February, 2 weeks ago. So if we break that 2-week low, that would most probably propel it down into the right around $50 a barrel level if that were to happen. But right now it's pulling down to see if it's going to hold the 78% level. That will also be at a 1.27 of the swing from the 22nd of February. So there's some nice symmetry here, but as we know, sometimes it works and sometimes it doesn't. So just always remember that. That's pretty much what we're looking at. Someone's asked a question is why the gold miners are acting so poorly as opposed to gold. Folks, I don't know, but that's a pretty big market, that gold mining market. And, there could be something something under maybe the sales of gold are not nearly as much as the price of gold is telling us. I don't know what it could be, but that's beyond my pay grade. All I do is look at the price action, and the price action would tell us that there's something is certainly not right. We saw the same situation when oil was going up. When oil was going up to that 140 a barrel level, the oil stocks were not acting that well. And that might have been the reason, but we don't know until later down the road what we're watching. The key factor to watch today in the gold is if we get above the 1260 level, especially 1265. We get above 1265, all bets are off. And, you think this thing could go crazy. But we had some really nice symmetry in the gold market for sure. If we talked about this yesterday on the show, and we had the solar eclipse and new moon, but we were looking at an area between 1250 and 1264 in the gold, and we got up, to that level. So we got a caller from Harrisburg, Pennsylvania, I believe. Bruce, are you there?
I'm here, Larry.
Yes, sir. What can I do for you, my friend?
I have a question about wheat. I'm wondering if it's setting up the 135 pattern on the daily.
Yes, sir, we are. Yes, we certainly are. If you'll give me a second here, I want to do two things. Hold on a second. I've got I've got this thing done wrong. Just a second. Here we go. Hold on one second, and I'll put up the March wheat pattern. It's going to take a while for it to fulfill here, but we got down to the 418 a bushel level, all the way down, to the 61% retracement of the low from December, and that is a 135 pattern. You're absolutely, as long as we don't get below 415, that is a 135 pattern, and it is set up for a rally. That's basically what it looks like now. The pattern in the beans and the oil was much more clear than it was in the wheat, and so that's why I looked at the beans as a potential buy. But you're correct; you do have a 135, and the 1 is back on December 27th. The 3 is January 30th, and then a month later again we have one on February 27th. So we're a month apart, all related to those probably full moons and new moons that we had at that time. But that's a good eye, spot on.
So what ratio between the January, from 0.3 to 0.5, what ratio would it be the buy, or what are you looking for there?
From 0.3 to 0.5, it shouldn't get much below the 786, and it did. The 786 came in at 422, and we got down to 419 yesterday in the wheat, which is within the ballpark, but you can't let it get below 412. Below 412, it invalidates the 135 pattern, and that's something that you don't want to have happen. Now, March wheat is getting ready to go into delivery tomorrow, so it's probably best to look at another contract like May wheat. Would probably give you a better idea of what the market would be looking at.
Okay, I'll keep on looking at that. I looked at it the other day, and I thought it was doing it, and I just want to confirm with you. So thanks.
It's a good eye. Thank you very much, and keep an eye on that pattern, because boy, it's really a really good pattern, and you can't dismiss it. That's for sure. Okay, folks, let's get back to the real markets. Let's go back to the gold here for a second, and if I can pull it up here, just give me 1 second. I want to show you what happened yesterday in the gold, because we were looking at up to the 1.61, the butterfly. The died gold broke $14 in a matter of 4-hour period, and so we were right back dollars off 55. Now, oh dear, you could have one heck of a run, and one of them are. Take a look at. Okay, folks, we're back. I've got knocked off the Skype line for a little bit, so just give me a second, and we'll get this thing hooked up so everybody can hear everybody, and we'll be in great shape.
All righty. The next thing I wanted to talk about is I was finishing up this gold. As you can see from the gold chart, we got up to the 1265 level and held. And if we get back above 1265, we could be looking at an explosive move in gold. But I don't think that's going to happen because of those ABCD structures and the fact that we're over that new moon and solar eclipse, and gold really reacts well to new moons and full moons. So this should be a topping pattern in the gold. Whether it's long-term or not, no one knows the answer to that. But, this is a bear market still in gold.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to talk a little bit about this winning streak that we've had here in the Dow. I've posted a chart from Business Insider that was forwarded by one of our Tiger folks. And you'll notice here, going back in 1929, July the 8th, the market was up 12, closed higher 12 days in a row. Again, the market did not top until September the 3rd of 1929. 1995, you'll see, 1955, February, the market again didn't top until September. of 1955. And, of course, in 1970, that was a market that had 12 up days. We had 10 in 1971. In 1973, on the 27th of July, that was right near the all-time high in the Dow Jones at around 1,020, and that led to the 74 collapse. It was called what was it called? Something like had a special thing. It was a massive drop, and that's the one that I learned so much on. Into October of 19, I can't remember. I can't even believe that. It should stick out in my mind. Must blotted it out. Anyway, from July 27th of 1973 until October 1974, the market gave up over 50% of its value. The Dow dropped from 1,020 to right around 470, I believe, was the number. Double bottomed in December of that year, so 74 saw a bottom in October, double bottom in December, and that was the one that was the real key to us doing the work in astrology that I mentioned to you yesterday. Folks have my book, Astro Cycles, The Trader's Viewpoint. You'll notice that I spend some time on that particular cycles because on between October and December, we had multiple conjunctions and oppositions, both on the October low and also on the December low. And this was due to several of the larger planets that were in retrograde motion. They were slow to turn, and that's why you had this massive double bottom. And then in January, the spring in January, the stock market actually gapped up, and it's never filled that gap. And that's the only gap that I can find on the Dow Jones Industrial Average. And the way data is back in those days and the way it is now, it could be wrong, but there was the big move which started in 75 that has continued on to this day. Now, you notice that the all-time record is 13 up days of high closings, and that was in 1987. You'll notice that was in January of 1987. The market didn't top until August the 25th. That led to the biggest crash ever, when stocks were down 16% in one day on October the 19th. It made it slightly lower on the 20th. And then 2 years later, of course, it took out those highs and went from 2,750 to where we are now at near 20,100. Of course, right now on the 27th of February, we just tied that record one more day, and we will tie the record for the most number of closing highs in a row. Well, I understand all this. These are things that seem to be very important, but the Oracle of Omaha, Mr. Buffett, does not think there's any bubble associated with this or not. But if you look at all the factors as far as the bullish consensus and the record margin debt and all the other things that's going on with student debt and car loan debt, and it's just it's really amazing to think that this could not possibly a bubble. And the bubble is not in the stocks, folks. The bubble is going to be in the bond market. It's the interest rate market that's going to have to be the one that is going to be interesting to look at, because if interest rate starts to go higher, the people that owe this money can't pay it back anyway, and now the cost of paying it back is even going to be worse. And that's going to be leading to something I don't think very well, but maybe it'll be different this time, because every time it is a little different. But we'll watch it very, very closely. I think the key thing to remember is that we've left two gaps on the weekly Dow charts. That has never happened. So that's what I'm basing the premise of what I'm looking at on some of these things of what we're watching. Since we're talking about the cycles, I wanted to show you a little bit about what we were looking at. I think the best way to look at this is to look at the big low, which was the one in March the 5th of 2009. I believe we came down and touched that same low in March the 9th, but March the 5th was the day I was watching. And as you can see, all of these planets are in two particular houses. The thing to look at, folks, you see, of the 12 signs in here, there were 6 of the signs had nothing in them. That is such an outlier event that you just don't see that, because every day they're splattered all over. It looks like a shotgun blast has hit it, but that's not the case. And if we look at what we're looking at right now, is you're seeing that you're going to be seeing the same type of thing in the here on February 27th. You're looking at 6 houses, 1, 2, 3, 4, 5, 6 houses that have absolutely no signs in them at all. And so that's a sign that, at least from a cyclical standpoint, that something big is most probably happening. Now, whether it's going to be, we'll be able to see out, see whether it's going to happen or not. But we'll watch it to see how it's going to be. It's going to be really interesting to see if it's going. Steve Roth has also told us that we have a P-index day today, which means that there's only 3 aspects, and that's on when you look at a bell-shaped curve, that's out into the 95% level. So that in itself is a very important thing. Plus, we have the new moon and solar eclipse, and there's a lot of things happening. That don't mean it's going to go down. It just means that there's something there that's going to be really interesting to watch as we look at some of these things. That is why we say the planets are aligned. They don't. I think what was one of those famous astrologers say that the planets. I can't remember the exact quote. The planets don't impel, but they compel. So whether that's going to be the same thing, we'll see what happens. Okay, Steve's got some really great information here. It says over 300 years, this only happens about 1.8% of the time. Boy, Steve, that's a great statistic. I don't know where you got that, but God bless you. I knew it was something like that because it's a very rare event. But we'll watch this to see how this thing is going on to take a look at it. We've got a lot of things that make it look interesting. And, of course, we do have March going. In March 4th, Venus goes in retrograde, but that'll be on Friday. That happens on the 3rd is Friday. The 4th will be Saturday, and that is. Okay, someone's asked what my plan in gold is. Benny, what I did yesterday, I was watching it real closely because, I'm really concerned about that ABCD structure that we have in gold and silver. And the fact that 1.618 expansion in gold was spot on at 1164.70, it didn't even hit 1165, which was really surprising. But if we get above the 1165, I'm going to have to remap the strategy. But what I think we have possibly here, and I say with a great deal of respect to gold, possibly that we could be looking at a pretty good correction just based on the gold-silver index.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Daryl Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN show shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and I've just been alerted by someone in the den that we have another gap up opening here, and soybeans are up another 10 cents. That puts them up 23 cents off the bottom. So if you bought some of that, you've made a little over 1,000 large. So, make sure you protect your profits some way. I would say use about an 8-cent trailing stop or something, but the action out of here is exactly what you like to see, given the solar eclipse and new moon, and a perfect Gartley at 1027. So my goodness, I think they're trading at 1050 right now. So that's a good sign. That doesn't mean it can't turn on a dime, but at least protect yourself, with that, because you never know what's going to happen, with some of these things. Another question that someone's asked me is about how you calculate the bullish consensus. Well, I use several different sources. One is a website, not a website, but the Elliott Wave people put out a really good chart on that, and also the St. Louis Fed has one also that's pretty interesting. These are published online that you can get just about everywhere, but these are really rough to trade off of. It's just to give you a rough idea of whether the market is overbought. Now you just have to look at it. The fact that we've had this is the real key to this market making this some type of a top in here, folks. This is I've posted this several times, but it's this important to look at it. And that is this Dow Jones chart. We've left 1, 2, 3 gaps over the last 3 weeks, leaving 2 weekly gaps on the Dow Jones. Folks, you're not going to see that ever. This is it. I mean, this is history in the making. This is how markets make their final top. These are known as exhaustion gaps. The first reason to think that this is a possible major top, and I'll repeat one more time, major, maybe twice, major top, is if we get below 20,600. That's down a couple hundred points from where we are right now. That's going to be the first sign that the cradle is not just rocking, but it's rocking and rolling. So, but you got to get about a 200-point break. That's 5%. Every time we've had some type of a major pop occur, you get a quick break of 5%. And if it's really a big top, it's going to be a lot more than 5%. But 5%, then a little short covering rally after that, and then another low below that 5%, and then it started. So that's what we're looking at. We've never been this far above on a percentage basis or relative basis above the 200-day moving average in the history of the stock market, of the Dow Jones, going back well over 100 and some years. So, and before that, you go back to 1875, they weren't using moving averages back then, but the key that most of these people look at is the moving average. And as you can see here, on November, we were making a perfect 61% retracement, perfect Gartley pattern right on election night. And now we've had this explosive move to the upside, ending what I think with all these gaps. Like I mentioned, I've looked at all these stocks. I can't find one that I would buy based on patterns. The only one is ExxonMobil, and it's not even acting bullish. So those are the ones that and I'm keeping an eye on. But remember these gaps. You're not going to see these again. Records are meant to be broken, that's for sure. When you talk about records, one of the greatest records in baseball is DiMaggio's 56-game hitting streak. But what they don't tell you about that is on the day that he got his streak broken, he hit 3 incredibly hard line drives. One was made with a spectacular catch, and then he went on to hit in 17 more games. That means his streak would have been out to 73. But anyway, that's neither here nor there. So we'll keep an eye on this. Anyway, if you did get in the soybeans, just put a stop at, yesterday's low or yesterday's high at around 10.39 if you want to. That would lock in a $550 profit for you. And then just let her rip because this thing is, waiting to see. Someone asked a question about the downside target in gold. It's got to go down first, Andy. And it dropped $14. We know that the harmonic numbers in gold are 17 and 34, so those are the ones that I'm looking at. But the problem is, Danny, is that this is a major ABCD in a bear market. Gold could make new lows. I know that's hard to realize, but this was a perfect ABCD move on the downside. The first one we've had in well over a year. And in fact, the way these gold miners are acting, I've been incredibly bullish gold, these last 3 or 4, last several months. But as of yesterday, I have to stand aside because of that ABCD pattern. It's just too powerful, folks. That's the most amazing thing, that you can see of. That's what's really fantastic. So. Folks in the den are bringing up baseball statistics, which is one of my favorite things to do. And I used to love baseball a lot more than I do now. Back when we were in Westlake Village, I had about half a dozen Dodgers as my customers. Plus, we had several old Dodgers as personal friends. Sandy Koufax actually lived about a mile from us, and we used to see him in the market all the time with his wife, Linda. She's the daughter of the famous actor Richard Widmark. And he used to talk to my children, and it was really, what a gentleman he is. He's a really nice guy. And so that's pretty much the old days. Let's get back to the markets here. The other thing that is, there's no more spring training in Tucson. Everything's been moved to Phoenix and Scottsdale. There are 12 baseball teams. They've got a huge complex there. They've got a Wrigley Field replica there for the Cub training, and it's got the ivy and everything else. And then at the Talking Stick Resort, where I play poker, they have 4 of the clubs there, and we get free tickets, and you get to go see the games, and it's really really nice. And the weather in March is fabulous, so you get to see a great ball game. And, hot dogs are $2, and, it's really a really nice thing to do. But it's crowded, boy. They got a lot of people coming in from the Midwest to see the teams train. Okay, let's get back to the markets. Back to the gold and silver. The first thing you want to see, Danny, is if we get a correction more than $34, that means that the gold would have to get down below the 1220 level. That was the old breakout level. If you remember, we bought it there. And then it had to run up. So if we get below 1220, that would be the first sign that this is something really, really significant in the gold. Now, the gold-silver index has already told us there's something wrong. That was one of the other reasons why I was so nervous yesterday, the fact that we had the gold-silver index down for 10 days and we had gold going up for 10 days. That's never happened that I can see. I went back and looked over about a 9-year period. I could never find that. So there's another outlier event that you want to be, is what we're watching at. So whether that's going to be anything or not, but watch that 1220 level in gold. That's going to be the real key to whether this thing has got legs or not. That's the bottom line of what we're watching. Also, we're going to almost come to the end here. We've got a break here, but watch the 20,000 level in the Dow Jones. That's going to be very important. But the level before that is 20,600. We get below 20,600, it starts filling the first gap. And then after that, it's got the second gap and then the third gap. So 20,600 is the key to look at.
I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. I posted a chart of the July beans. They're now up 30 cents off their bottom. Be sure you protect some profits in here. I don't think it's going to run away from this level, but it certainly started right. If you go back and look at other times when we had these wide ranges, they've continued on for a few days. So the main thing is to protect yourself here at some reasonable level. I would think that the worst 1038 would be the absolute worst that you'd want to see a correction come to. So watch it very, very closely. The other thing is to remember the 20,600 level. That would be the first gap in the Dow. When that's filled, that's going to mean there's going to be a sequence of filling the gaps all the way down to 20,000, and below 20,000, look out. That could be a real interesting thing to be happening, and we'll see. And it would be really interesting to see this. But Tony, I know I'm reading what you said in here about the Ty Cobb story. When he was talking to the owner of the Boston Red Sox with Ty Cobb. And the story is that they asked Cobb how well would he do in the majors today, and he said, well, I'd probably hit about 275. I said, why so much? And he said, well, I'm 71 years old. I'm a little slower than I was then. But anyway, he had an incredible opinion of himself, but boy, he was probably one of the greatest. Anyway, let's move on. We got just a few seconds here. Keep in mind, folks, 20,600. If you see that, that's the first time that we'll see a crack in the armor of the old Dow Jones Industrial Average. That number in the S&P would be around 2040. as I recall. So watch those numbers as we see. I will not be here on Wednesday and Thursday. These are travel dates, so I will be back on Friday, and then I'll be back next week, of course. But I will not be here tomorrow and Thursday. So that's primarily what we're looking at here. Keep in mind on that 20,600, folks. That's the key level to look at, and in the gold, of course, 1265. That'll be it.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.